Hello, this is Catherine Morgan-Nance with a two-part review of process costing and what it means to compute equivalent units and assign manufacturing cost in a process costing environment. Thanks for watching. This presentation is split into two parts for your convenience. In Part 1, we review basic concepts and manufacturing cost flows. In Part 2, we will walk step by step through a process costing example. Our discussion will be more meaningful if you already have knowledge of basic manufacturing cost flows in a job costing environment. Please refer to my job costing videos for more information. Let's start with some basic concepts. Process costing is used when a product is manufactured using a uniform process and it is homogeneous in nature. Homogeneous means one batch of the product is the same or practically the same as another batch. Examples of such products would be lumber and molding, wallboard, aspirin, Hershey's Chocolate Kisses, Pepsi-Cola and other soft drinks, and so forth. Products are manufactured in a series of sequential processing departments. For example, potato chips may be handled in several departments: preparation, where they're washed, peeled, and sliced; cooking, where flavoring is added; and packaging. Material, labor, and overhead costs may be added to the product in each of these departments. Work is completed in each department before the product moves to the next department. Therefore, work in process may exist in several departments at the same time at the end of the month. And finally, under the weighted average cost method, costs are averaged together during the period and assigned to products using that average, which is called the cost per equivalent unit. More on the flow of cost next. Let's review process cost flows at a high level then. The most significant difference from a job at costing environment is the existence of multiple work in process general ledger accounts. In fact, in process costing, one WIP account exists for each processing department. Costs are assigned by processing department rather than by individual job. And this is important, okay? It is this feature, costs being assigned at a department level rather than a job, that creates our requirement to find the average cost per equivalent unit. So more on this one later. For now, let's consider a company that makes potato chips. In the preparation department, potatoes are washed and peeled and sliced. Next, the potatoes are transferred to the cooking department, where they are fried and seasoned with salt, barbecue flavor, and so on. Finally, the cooked and seasoned potato chips are packaged, boxed, and shrink wrapped. Then they are transferred to the finished goods warehouse for shipment to the customer. In each of these departments, material, labor, and other plant resources like machinery depreciation and maintenance are being added to the product. The accounting for the cost flow of these costs is similar to job costing. The only difference will be how the per unit cost of the product is calculated in each department. As we saw in job costing, raw material purchases are recorded in the materials inventory account. When direct materials are used in production, which could be in any of the work in process departments, the cost of the materials is added to the appropriate work in process account. Direct labor costs are also added directly to multiple work in process accounts. And manufacturing overhead costs are applied to work in process by multiplying a predetermined overhead rate by the actual quantity of the allocation base consumed in each department. When goods are completed, their costs are transferred from work in process to finished goods. The amount transferred from work in process to finished goods is referred to as cost of goods manufactured, and as the goods are sold then, their costs are transferred from finished goods to cost of goods sold. Period cost, or otherwise known as selling and administrative expenses, do not flow through inventories on the balance sheet. They are recorded as expenses on the income statement in the period incurred. These types of costs are not illustrated on this particular slide. The form of journal entries you'll be making in process costing is very similar to job costing. Remember, you will be debiting costs to more than one WIP account as you use materials and labor and overhead. The only truly new journal entry you are preparing is the entry to transfer costs from one work in process department to the next one. The cost of direct materials, direct labor, and manufacturing overhead assigned to partially completed units transferred from Department A is debited to Department B and credited to Department A. The transferred in costs from Department A are then added to the manufacturing costs incurred in Department B. Now, the problem we have in process costing is that costs are accumulated by department and not the job. We don't know what individual product being worked on in our department costs because we're not tracking the costs by job. As a result, we have to come up with some way of allocating manufacturing costs for the period to all the product we worked on in our department during the period. We are easily able to figure out total costs we must account for. They include the cost of beginning work in process, plus any cost added during the period for materials, labor, and overhead. Quantifying the number of physical units we worked on takes a little more thinking, but it isn't too bad. Consider it this way. The product we worked on during the period includes the units completed and transferred out of the department during the month, and it also includes any units that are still not completed with respect to the processing done in our department during the month. We would consider these last units to be our ending work in process inventory. For example, we might have fried potato chip slices but not yet flavored them in the cooking department example we looked at a couple slides back. The physical number of units we worked on includes all the chips we fried and flavored and transferred to packaging. It also includes the chips we fried but had not yet flavored. But wait, should the units that are not complete get the same cost as the units that were completed and transferred? Replay that question and think about it. The answer, of course, is no. Completed units should cost more than units that are not yet complete, right? This is the reason we will quantify equivalent units, EUs for short. We come up with a cost per equivalent unit and apply that cost to equivalent units completed and equivalent units in ending work in process inventory. Let's discuss equivalent units next. Equivalent units are defined as the number of fully completed units that could have been produced given the amount of work performed in a department during the period. Partially complete units are sometimes 100% complete with respect to the materials added in a process, but less than 100% complete for direct labor and factory overhead. Examples include chemical or brewing processes that add direct materials at the beginning of the process, but require additional labor and overhead while the processing occurs, which sometimes extends over hours or days. Because costs occur in a process at different times, the addition of materials versus labor, for example, equivalent units are calculated separately for each of the cost elements a firm is tracking. Direct material equivalent units are calculated separately from direct labor equivalent units, and some companies combine direct labor and manufacturing overhead into one cost category called conversion cost, because direct labor is relatively a small component of overall cost. This is true in many process industries such as oil refining, aluminum, paper, chemical, and pharmaceutical industries. So you'll sometimes see the calculation of equivalent units for conversion cost. So let's consider then how to think about equivalent units next. The basic idea behind equivalent units is easy to understand, but the computation of equivalents can become complex. As accountants, we usually don't have the expertise to come up with the percentage complete of a particular inventory item, but we do know how to compute an equivalent unit once we have that information. Usually, we'll just ask our production engineers to help us quantify just how complete a partially completed unit really is. For example, we can say that 2 half cups of water are equal to 1 whole cup. Therefore, 2 half-completed units of production are equal to 1 completed unit. Using this logic, we can say that 10,000 units that are 70% complete are equivalent or the same as 7,000 completed units. Well, that's all for now. In part 2 of this presentation, we will look at an example of how we allocate all the cost of production in a department to the equivalent units worked on in that department during the period. See you shortly.